When it comes to investing, a lot of people talk about it, but how many people actually go through, build out the portfolio, show you what it is, and actually invest the money? That is what we're doing today, guys. We are 5 weeks into our debt-free journey, and we're continuing with M1 Finance to go ahead and build the portfolio by investing $1,000 every single week, Monday morning. Now, if you've done your research, Monday morning is the best time to invest in the market because it kind of digests the stuff that is going over on the weekend. So let's hop over to M1. We'll track our progression within here. Let's take a look at it. Right here, guys, we do have our debt-free journey. You can see the current value is around 76 right there. Overall, the gain since 21. So we've been in this 2 years and 2 months at this point, little less than that. But you can see we're at about 8,200 as a gain, or 34.60%. So overall market gain has done pretty well, 74.48. And then of course the earned dividends is 761. Now you can see, guys, kind of this is the pie. M1 does break it into pies instead of shares, instead of sections. But you can see that we are very, very heavily weighted in the VOO, the Vanguard S&P 500 ETF. Now, ultimately, for a majority of time, that is what I've been investing in, is the VOO. And then, of course, we did diversify a little bit, picked up a couple different ETFs, ran this past my financial advisor. He said it looks really good. Go ahead and give it the go. So looking at our last week, we are up a 0.25. Now, last week was probably one of the absolute slowest weeks that we have seen as far as the market is almost flat in its entirety. And I do want to break it down with the funds that we do have in this portfolio and how we've actually built it again in 2 years. I mean, we're netting about $4,000 plus a year, which is kind of crazy to think that we're seeing some very significant gains, some very significant growth over the last 2 years. Now, of course, with this, we are using dollar cost averaging. So what that is, guys, is every single week we are putting money into the market, which means if the market is up, great, we're buying less. If the market is down, it's super, super ecstatic. If the market's down, that means we're buying, and we're buying more of the specific ETFs. Now, the reason why I invest in ETFs, and this, of course, is one question that I also do get all the time, guys. Looking at my ETFs, it is an entire group of stocks. So when you actually break down the ETF that makes up the Vanguard S&P 500, if you go down and if you go to the VOO details, it breaks down what they actually hold. So this is the big thing, guys, is I personally do not invest in any one single stock. I invest in the ETFs, which are in the market. And you can see, guys, almost 97% of almost 100% of this portfolio, 99.61, is in stock. This is my personal opinion, is that money is meant to be invested. It's not meant to sit in savings accounts. It's not meant to sit in CDs. It is meant to grow in the stock market with the companies. Now, you'll also notice, guys, that the VOO, this is American-based companies. So it is US-based companies, and it is the 500. I believe the build out is 500 in like 33 companies that are largest within the United States, which is the reason why I own this. This kind of is the market overall. Now, looking at the other funds that we do have in here, the VUG, this is the growth fund. So you can see, guys, even since we've invested in it, we're at about a 40% return. So growth fund, it is growing as we intended. It is growing, which is very intentional. Looking at the VUG, you'll notice there is some overlap. So when we do get it here, looking at Apple, looking at Microsoft, looking at some of the larger companies. But when you look at a lot of the growth, a lot of it does come from larger companies. And this does kind of overlap some, but it does not overlap all that we have in both funds. So again, a little bit more focused on the growth is the one with the VUG, which is the reason why I wanted to picking up a growth fund. Now, we do have the QQQM, which is the NASDAQ 100. So we are carrying the S&P 500, and we're also carrying the NASDAQ 100. So these are the top 100 companies within the NASDAQ. So a little bit of a different build with this one, even when we go down to the QQM details and we kind of break it down, you'll see, guys, some of the very similar companies that we see in here, but there are a lot of different ones in here that they are carrying at different weights. But again, looking at the overlap, it is going to be, and it is going to happen depending on what funds that you do have. Then, of course, the final one that we got is my dividend holding. Now, this one, of course, over time, it stays very consistent when it comes to investing in the SCHD, which I know a lot of you are probably very familiar with. What you can see here, guys, is when we start breaking this one down, this is a dividend stock. So again, looking at this, Little bit of a different dynamic than we've seen with the other ones, but you can see almost every single ETF that I carry is almost 100% into stocks. That is right. I do not, like I said earlier, I do not invest in a specific stock. I hold groups of stocks, which really balances out the market, balances out the risk. And you'll see, guys, some of these, like this one in the last week, we're actually down a little bit here, market gain around negative $18. But overall, the Schwab, the SCHD overall, it is my dividend fund. It is the constant payer of dividends that they're yielding. Even the dividend yield here, guys, 3.67. So I'm making over 3.5% with the SCHD. That is the reason that I hold it. So it stays kind of even. And also with the market price of it, it's been pretty well discounted at this point, which means that it's a lot cheaper to pick up. So when we do pick that up, we are seeing a lot more growth out of it. We're seeing a lot more dividend returns. And we're in December, guys. We're getting into the second week of December, which means the dividends are coming pretty soon. You're actually going to see our earned dividends go up considerably as we continue our investment. And again, let's hop over. I want to look at our tracking sheet within Excel, and we'll go ahead and we'll build this out and show you exactly where we're at. So we started this on the 13th. Tomorrow will be the 11th, which again, this will put $5,000 more into the market. And you can see just kind of tracking the return. And this is something I really do enjoy doing. It's very, very cool to see kind of the growth over time. Over the past, and I believe it has been probably about 6 or 7 weeks, the market has done incredibly well. So if you're invested in the market, you have seen some kind of crazy returns that you've seen over the last, again, couple weeks in the market. Now you can see net cash flow, we went from 65 to 68. It has increased our 1,000 right there, 1,000. Now this one we did record before the 1,000, and then this one was before the buy. It was actually the day before. That's why it's a little bit different. But now we're on track, guys, going up 1,000 every single week with the cash flow that we do have in there. Now, market gains, you can see kind of where we went. We started at about 43. Now we're at about 82 right now for the market gains overall. And I'm just using that overall arcing number. Now, our dividends have remained the same since we've started doing this. We haven't received any dividends as of yet, but this is the end of the quarter. This is the point that we are going to start seeing those dividends. And you can also see where the balance went, guys, from 69 to 71 all the way up to 75. So putting in some money, again, this is on a weekly basis, but you can see the balance difference. And this is week to week. This doesn't give me the sum that we've earned in totality. This is the balance where we have kind of earned week to week based on the balance of 1 week carried to next week. This has been the difference. Now I did exclude the $1,000 that we have going in there. So this is just straight gains that we've seen on here as the portfolio continues to grow. And I think even, if you're at 70 versus, at 100 or 200, you're going to see these balances dramatically have a much, much bigger kind of margin in there when you're starting to grow the balances in there. And then, of course, if you look at what we had and what we're investing, so the VOO, we were at 49.72. It's almost up to 8,000 over the past 5 weeks, guys. So and again, this is tracking the gains, which I'll pop over and I'll show you exactly what I'm talking about. So QQQM, we had 50 in there. Now we're at 102. So we've almost doubled in 5 weeks. The VUG went from 1487, so that we picked up about 70. And then the SCHD is, even as you've seen, a little bit down from where we were last week. Now I'm going to show you exactly where we're kind of getting those numbers for, which are right down here, guys. So I'm not doing the percentages, not tracking the percentages, but we're actually tracking the gains in here, which is what I put into our spreadsheet. So we can know when it comes to, a couple months or even a couple years, exactly where we started from through the dividends, how much we earned. And it's kind of hard to break out some of the data if you're not kind of breaking it down in the sheets, like in the Excel spreadsheet, like we are. It's kind of hard to see at any point in time exactly where the value is in your portfolio. But you can see, guys, going all the way back to September, we put $200 in here, September 27th of 2021, and we have grown it all the way to almost $76,000 at this point. And we're going to continue putting money in there. Then, of course, guys, our funding history, we talk about this too. First year, we put in 2,200. This year, or last year, 2022, we put in 2,500. And then, of course, we put in 43. So the goal is 52, guys. So we're getting pretty close. Still have a couple more weeks in here, but that is my goal. what I've done to actually achieve this is I've cut back on a lot of spending and a lot of different aspects of my life to try to achieve this, to really try to push this. Now, of course, some of that does come from YouTube revenue. It comes from a couple different sources. If you're not having passive income from different sources, guys, I really, really stress that you need it. You have to have a side hustle. You have to have more than one income stream, because essentially, if something should happen where you do lose your primary form of income, your primary job, you're kind of out in the wind if you don't have the ability to actually generate income through a different source, which is why I highly recommend getting something, guys. But all right, so that's going to do it for today's video. Let me know in the comments what you guys think about the journey. And as always, thank you guys for watching.